There's so much pain in my body, it's like that old town road, yeah. And I don't think they can stop me, cause to the top, yeah, that's where I go, yeah.
All right, for sure. So, understanding the Wyckoff method, my guy. All right. So, first off, firsthand, first experience. You dig what I'm saying? Um, you got your distribution right here. All right. Distributions are coming in the form of snowflakes, right? So we ain't really just we don't really care about the fact that it don't look like no full distribution. All we could say is buying climate under automatic direction, secondary test, sign of weakness, first sign of weakness, UTAD, boom, breakdown, you know what I'm saying? Then price came back into that area, tested the top of that range, and started breaking down. All we know is liquidity was started getting taken, liquidity was made and it was taken, and price moved to the downside, which showed that was a distribution. Right? So what do we understand? What am I about to explain here? Um First things first, the first break or in the second break, to me personally, with the first break or the second break, right? So if price break that first time and that second time, I'll look for a trade. Matter of fact, let me just draw this right here. So I already drew it right here. So if price break one, two, let me just do that again. All right, so I'm just draw it out. If price break one, two, three, four times. All right. Okay. So after the first break, I still don't have a trade set up because that could easily just be a liquidity grab and price can just easily continue up. After the second break, though, I have two trade ideas. I have a trade idea at this supply zone, and I have a trade idea at the initial supply zone. Why? Why after only one break, I didn't have no trade idea, but after two breaks, now I got two trade ideas. Because this right here could be looked at as liquidity used for price to take, right? To take to continue the initial move. So, all right. So that's why I have two trade setups on the first two breaks. Now, wait, I don't want to do this yet. Now, if price break structure a third time, now I only have one trade set up. The reason why is because one low has been liquidated, two lows have been liquidated, three lows have been liquidated. At that point, the market has already shown me multiple times that price has done is the price is done with its distribution cycle or accumulation cycle, whichever. This could be an uptrend as well. It doesn't matter. We're looking at a downtrend right now though. Price has shown me that the markdown has begun. So that in that case, these two zones to me become invalid because there's no reason for price to come all the way back up there unless it's about to start a different cycle. So third breaker structure, I would like a tap in there, and that'll be my last trade idea. Why do I not get into the fourth breaker structure? The reason why is just because at that point, after four breaks of structure, you have to ask yourself, are you still buying low and selling high? Or are you just trying to get in because you don't want to miss the rest of the move? Because I can tell you what happens. A lot of times it'll make that fourth break, start playing around. You try to get into the fourth break, price just immediately change direction. Made some form of a reaccumulation down in here, some type of reaccumulation down in here, and then price act like it was about to drop, came into your area, dropped a little bit, and then changed trends. So you just gotta pay attention to that, man. But yeah, that's more like a little YouTube clip. We finna get back to this session.